Well, welcome everyone to our webinar this evening. It's wonderful for you to join us. If you're joining us live here on November the 6th, 2019, or if you're listening to this webinar through a recording, we welcome everyone who is being with us tonight. We are expecting not a large audience tonight, but we know that many people after we record this will be listening to this webinar and seeking to gain more information to begin the process of considering whether or not socially responsible investing is right for them and their congregation. And I use the word congregation as opposed to what we typically say in the Episcopal Church, a parish, because this is intended to be for an ecumenical audience. So it's wonderful that you have joined us. If you're just joining us now, please do type in your name, the name of your congregation or entity, and your location into the chat message. Also, if you have questions throughout our presentation tonight, I regret to say that we won't be able to speak those questions, but you can certainly type them. And you can type them either into the question and answer or directly into the chat box. And I will be monitoring this throughout our webinar tonight and posing those questions to the particular panelists that might be most appropriate. We'll also be hearing from each of our panelists. So without further ado, let me get access to our slideshow. Okay, there we go. And so briefly, the Episcopal Church Foundation, we are the foundation for the entire Episcopal Church, and we serve all of its dioceses, parishes, and related entities. We do a number of things in the area of leadership resources and financial resource development. Many of you may be familiar with our work in planned giving, endowments, capital campaigns, or our various resources available for vestries. In other words, parish councils or other types of entities that are in charge of activities at parishes. But what I wanted to make clear, and we will put up on our website when this webinar is posted as a recording, for all of you out there from other denominations, please know that there are many entities like the Episcopal Church Foundation that will assist you in the area of socially responsible investing, as well as investing in general. We have some representatives here tonight representing the Roman Catholic world, the Episcopal, as well as the Presbyterian universe. But unfortunately, we don't have many more, but there are many out there, and they are all available to you and to assist you in your denomination. Some denominations do not have a separate foundation to do this. They actually do it themselves, like the Unitarian Universalists. However, all of these denominations have resources that are available to you and to help you through this very important process of considering socially responsible investing and if that is the right next step for you. What I'd like to do now, if I may, is to introduce our wonderful panel. And I will start with Karsten, since I see her up on the screen first. Karsten is a colleague of mine here at the, I should probably also say my name. My name is Jim Murphy. I'm the Managing Program Director over our Endowment Management, Planned Giving, and Donor Solutions program. And I work throughout the country with dioceses, parishes, and other entities to help them to enhance what they're doing in their investment management, in planned giving, as well as to help them stir up that interest among donors for supporting their work. I am happy, as I say, to be joined by my colleague, Karsten Sirk, and let me just read her bio briefly. Karsten is a program director here at the Episcopal Church Foundation in the same areas of endowment management, planned giving, and donor solutions. She works with churches, dioceses, schools, and other church-related organizations on how to structure, manage, and use and grow, which is so important, as we know, their endowments. She consults with lay and clergy leaders considering socially responsible investing at their churches. She's held positions previously in financial planning and wealth management in Cleveland, Ohio, where she founded her own firm. And that is where she worked to improve the financial lives of families in transition. She has practiced law here in New York City and Washington, D.C. as a graduate of Columbia and the University of Virginia Law School. So thank you, Karsten, for being able to join us tonight. I am also happy to welcome Kevin McGowan, who is the Chief Financial Officer at Catholic Extension since 2008. In addition to his financial responsibilities, Kevin was instrumental in establishing a pooled investment fund in 2012 to allow smaller Roman Catholic dioceses to get access to world-class fund management not actually available to them if they were to invest individually. That fund, which Kevin has been overseeing, is now over $150 million and continues to grow. Prior to joining Catholic Extension, Kevin was a management consultant for over 20 years, working with many Fortune 500 companies in their strategic, operational, and organizational challenges. Kevin has a BA from Wesleyan University and an MBA from the University of Chicago, Booth School of Business. And finally, my good friend, Greg Russo at the Presbyterian Foundation. Greg is president of New Covenant Trust Company and executive vice president and chief operating officer of the Presbyterian Foundation, which serves the Presbyterian Church USA. He is a certified public accountant and a certified financial planner professional. Greg is a graduate of Ohio State University. And just so that you know and should be impressed, I always try to encourage Greg to be talking about himself, which he doesn't because he's such a modest man. But at the New Covenant Trust Company manages over $1.7 billion in assets on behalf of Presbyterian parishes, as well as $20 million in donor-advised funds, and the Episcopal Church Foundation participates in their program. You would never know it. Everything looks Episcopal, but I can assure you it is a collaboration with the Presbyterian Foundation, and they also manage over $550 million in planned giving assets. And I can take off my reading glasses because I don't have to look at small print anymore. But thank you, all three of you, for participating in this endeavor tonight. The people on this webinar tonight have all participated in a new book that's coming out from the Episcopal Publishing House called Church Publishing. It's the name of this webinar tonight, called Faithful Investing. And that book is an ecumenical endeavor where we have brought together many different voices, all with the intention of not telling you exactly what you should do in the area of socially responsible investing, but helping raise awareness and give you tools and information so that you can make choices in the future. My intention is not to over-promote the book, though I am general editor and really proud of all the great work that my collaborators and I have done, but also to let you know that we will have many free resources on the Church Publishing website that will be available to all parishes, congregations, various entities all throughout all of these different denominations, and they'll all be available to you. But this evening, this was intended to just be an introduction to a variety of topics on socially responsible investing. So we're going to get right to it. And unfortunately, you have to start with me, who will also be the person controlling things behind the scenes. But just very briefly, as we introduce the topic of socially responsible investing, this is a complex area, an area incorporating a number of different options for parishes and other entities to consider. Should you be interested in considering divestment? Should you be considering engagement? Should you be considering doing other things that are available to enhance the social good of your local area and the world? There are a number of different things to consider within this context, and I'm very happy to say Greg Russos will come up next and give you the basics about all of this, but there's many things to consider, whether it be shareholder advocacy. Are you supporting diversity in the workplace? Are you considering investing in something that will have a true direct impact? All of these things are the many, many topics which you can consider as leaders of your congregation or entity. And there is clearly rising interest in it. We have seen interest among Episcopalians increase through the years, and especially among younger people. However, these topics are very complex and require a good amount of you as a leader of your institution or congregation to spend time gathering information, considering what you want to do, what is important to you. And you should do that, and you should reflect first, then gather your leadership together and consider what is right for you as a congregation or entity. I will also encourage you to reach out to your denomination or your denomination's foundation. All of these institutions have worked very hard to bring about a variety of different options for you to consider, and they're available to you as a member of your own denomination. So I encourage you, if you're Presbyterian USA, to reach out to the Presbyterian Foundation. If you're Roman Catholic, work with your local diocese and try to work with someone like Kevin at Catholic Extension. Or if you're Episcopal, you're always welcome to reach out to us here at the Episcopal Church Foundation. But as you get started, the one guiding principle I will tell you is don't try to do everything at once. Don't try to be perfect. You need to do this sort of work incrementally. And I shall now stop talking and turn the floor over to the very wise Greg Roussos from the Presbyterian Foundation, who will give us an overview of some of the basics. So Greg, go right ahead.
You're too kind, Jim. Thank you. And thanks, Jim, for all you're doing. Over the years, I've come to really value and treasure Jim, both as a friend and as a colleague in ministry. So thanks, Jim. And as Jim mentioned, I'll try to do an overview. I'll try to cover some basics. As Jim mentioned, socially responsible investing is complex. There's many different definitions, many different ways to implement socially responsible investing. So this is really the beginning of a conversation. And if you decide to venture down this path, it requires some discernment. So let me start with some background. You know, socially responsible investing, you could argue, started hundreds of years ago, but it really started in earnest back in the 1960s when there were a variety of social issues like civil rights, urban decay, gender equality, and the Vietnam War. And one of the kind of things that galvanized denominations and foundations together in socially responsible investing was the situation in South Africa, apartheid. And, you know, apartheid came along, and through some actions, through socially responsible investing, there was an impact, and there was an impact that was felt through South Africa, or by South Africa, through these efforts. And actually, kudos to the Episcopal Church, who actually filed the first religious shareholder resolution in 1971, calling for General Motors to withdraw from South Africa until apartheid was ended. So socially responsible investing, you know, also started to come together, and the World Council of Churches actually spoke about this in 2012, and they called for an economy of life, justice, and peace for all. And their words were really energizing words about God's hope for the world. And it called for this economy through socially responsible investing. It requires us to be honest about the ways in which we invest our money. You know, are we really following our values and our convictions, or are we really focused on the bottom line? And if we are trying to invest through our convictions and our values, how do we go about doing that? And what I want to cover through this introduction is really just a couple, maybe three considerations that you might want to give to socially responsible investing. The first is whether you screen securities, whether it's a negative or a positive screening of securities, what to include or exclude from a portfolio. The second is advocacy, as Jim mentioned, and then the last is community investing. So let me touch briefly on each one of those. The first being screening, whether you include securities or exclude securities. A lot of times people believe socially responsible investing is just about excluding securities. That's called a negative screen. And historically, that's been a common practice to where we say there are certain sin stocks or certain companies out there that we shouldn't profit from because of their activities. And you can look at things like weapons and firearms and gaming and alcohol and tobacco are some of those common things that we've kind of rallied around and said maybe we shouldn't profit off of those. So negative screens is a common way to begin implementing socially responsible investing. Probably in the last few years, there's also been a lot of momentum around what's called positive screens. And that is, you look for companies to include in your portfolio. And this is commonly known as environmental, social, and governance screens. ESG is what it stands for, or is the abbreviation. And ESG, what we're doing is we're looking for corporations that have sound policies and practices related to environmental concerns, social concerns, and governance practices. And if they have good practices in those areas, we want to reward those companies and invest in those companies, believing that those good practices and policies will lead to companies that will perform better and be more sustainable over the long term. So that's screening, and you can actually combine those two. We have a lot of portfolios at the Presbyterian Foundation where we do implement negative screens, and we also implement positive screens. We do a little bit of both. The next consideration is the level of advocacy that you want to have as a shareholder. As you probably know, owning stocks or equities in a company means you're a partial owner in that company, and it gives you a voice being an equity owner in a company. And as a voice, that allows you to vote on shareholder resolutions like proxy voting. It allows you to attend shareholder meetings and speak at shareholder meetings. And if you have enough backing, you can also file shareholder resolutions. And what you'll typically see through advocacy and through resolutions and proxy voting, what you'll see come before you are things like pay for executives. You'll vote on board members. And it allows you, and you can also see some environmental issues that come up. So it allows you then to speak or have a voice or a vote on gender equality, pay equity, environmental concerns. Through shareholder advocacy, you really have a voice and you can have an influence. But it takes a lot more work. It takes a lot more discipline to take the securities that you own and vote those proxies, attend shareholder meetings, or attempt to file shareholder resolutions. The last area that I want to mention is community investing, and Jim touched on this. Community investing is where you really look for a positive social impact from your investment. A lot of times, these investments have more risk, and they have little or maybe a smaller financial return. But the social impact is what you're looking for, and that social impact could be creation, caring for creation through reducing carbon emissions. It could be microfinance loans for employment and things like that. So that's another aspect of socially responsible investing. And to close, I would just reiterate what Jim said at the beginning. If you wait to be a perfect socially responsible investor, you will never be a socially responsible investor. You need to start somewhere. Start with doing something, whether it's negative screens, positive screens, and start walking down this path to have an impact as an investor. You know, the trend for socially responsible investing is huge. It's grown 30% in the last couple of years. It's no longer a fad. there's $12 trillion that is invested in a socially responsible way. So those are the basics that I wanted to cover. There is a lot regarding socially responsible investing. And as Jim mentioned, there'll be a lot more resources available too coming soon. And always reach out to your denomination or your foundation if you need to or if you have questions. So Jim, that concludes my thoughts.
Well, thank you very much, Greg. And as I had mentioned before, if folks have questions for anyone, please do type that in either to the question answer box or into the chat box, which I have up, and we will try and answer those questions. And just to reiterate one thing that Greg is saying, it's not going to be consistent for everyone. Your congregation, your denomination will be different from others. And so you must consider what is appropriate for you in your context. And to that end, I shall turn the floor to our friend Kevin McGowan, who represents Catholic Extension, a fantastic organization based in Chicago. Kevin, you've had some really interesting experiences putting all of this together in the real world, as I often put in Dr. Evil quotation marks in the book. Can you please tell us a bit about your experience and the importance, as you say, of transparency in the process you went through in your circumstance?
Sure, happy to be here and happy to share some of the experiences we had. And the point I would like to make from my portion of this talk is that SRI investing on behalf of a congregation, or in our case, for over 50 bishops, requires a disciplined process and should be transparent and open for scrutiny. Jim talked about in the bio how we set up this pooled investment fund for the poor Roman Catholic dioceses across the U.S. And the Catholic Church, this is a very novel concept of voluntary cooperation across dioceses. And we're really proud that we've grown this up to 150 million of assets under management. Now, the thing is the mandate associated with this investing needs to follow socially responsible investment guidelines laid out by the U.S. Conference of Catholic Bishops. Now, it's a very easy to understand roadmap, and Greg more or less talked about the general tenets of it. But the key thing that it recognized was that you have two competing priorities. First is you need to apply sound financial stewardship so that the investments can provide funds for the necessary mission of the church. Secondly, you need to practice ethical and social stewardship, just like any other activity that the church undertakes. And so the document laid out how to go about it, and it's very much in lines of the way Greg talked about it. The first one was labeled Avoid Evil, which is pretty much associated with negative screening. And those tenets were laid out for those negative screens. The second was called Leverage the Role of the Stockholder, which really applies to being shareholder advocacy on behalf of socially responsible actions that are desired of the board and of the corporation. And the third piece was called Promote the Common Good, which goes back to the community investing or impact investing that both Greg and discussed. Now, even though this all seems easy to understand, we found that implementing these guidelines were overwhelming. We were just finance folks trying to do our jobs as best we could. We're not theologians. We're not there assessing all these potential investments. And we know whatever we decided was going to be critically reviewed by over 50 bishops and their staff on how we followed the SRI guidelines. And the other thing is part of the guidelines rationale was to protect bishops from the appearance of scandal in their investment practice. And this was not an area to be asking for forgiveness after that. So we were very nervous in terms of how we were going to pin the processes as it was laid out. Now, what we decided to do was we didn't have the skill set to do all this all at once. So we then focused on the negative screening. first component, which was avoiding yield. And so that's where we started, and that's how we were going to show that we were compliant to the guideline. And the best decision we made was to buy the list of negative screen companies from a third-party data provider, since there was no way we could do this internally of generating this list, especially if we were going to look at opportunities on a global basis. So having a set of negative screening criteria was a big help for being confident that we could manage portfolio according to the SRI guidelines. After much deliberation on how to perfectly apply negative screening, we realized we can do it. So what we developed was what we call the trust but verify SRI decision process that would work for how we would manage this portfolio. First thing we did is we said we're going to find the best fund managers each asset class. We're then going to see if there are any SRI branded funds in there, and if they were, we would give them the advantage for investment. Otherwise, we would research the behavior of those over the past 4 quarters, and if they fit, and we then would do the trust portion of the investment decision and decide to invest, hoping that they would comply in the future. Therein, after each quarter, we would track the holdings to ensure that the fund manager stayed compliant. And then if they did have any were out of compliance, we notified them and asked them to reconsider the investment theses. If the manager remained out of compliance to our assessment model for 4 quarters, we terminated that investment and sought another fund manager. Now, this was a very disciplined process, and we've terminated several well-performing fund managers and also passed on investing in managers that many people would otherwise regard as world-class. And without this disciplined process, these decisions would have been much harder to make as we're going along. So as we've been managing this over time, we now have gotten our portfolio 99.4% compliant. And although we strive for a perfect 100%, we realize if we want to manage this responsibly, we're not going to find all these managers that can do it on our behalf. So we know that we're never going to be 100%. And our investors have learned and recognized this process. So they have entrusted and agreed with how we're doing this. So with that, what I'd like to do is end my discussion of how we applied the negative screening. And now that we're doing the negative screening, we're now looking into the impact investing for the next portion of how we would try to get return. And so the key thing I want you to take away with, it's a common theme. Don't be overwhelmed by the pressure to be perfect, and instead create a disciplined SRI decision process you can follow consistently, report that compliance, and we do it on a quarterly basis, and be open for scrutiny and improvements as you evolve. And if you decided to use just SRI branded funds, the only thing I would let you know is that that market is still evolving, so it's going to take some time to find the right ones to meet all your needs. So with that, I back to Jim.
Thank you very much, Kevin. Very true. And perfection can be the enemy of the good. So thank you very much for those insights. So continuing our discussion tonight, I turn the floor over to Karsten Sierck, who's here at the Episcopal Church Foundation. Karsten, what can you tell us more about the proactive side of socially responsible investing in ESG?
Sure. Well, what I actually really wanted to focus on is for those of you who are listening, who are part of a church, a parish, a congregation, a local institution. We're talking here tonight about how to get started with socially responsible investing. And one part of getting started is building consensus in your church or organization that socially responsible investing is important. And maybe some members of your congregation ask about it, but church leadership doesn't really know what they mean, or maybe a governing board wants to see it, but an investment committee is hesitant to adopt a new strategy. So one way to help you build the consensus that you need is to understand and explain what you hope to accomplish. And to do that, it may help to understand the impact that socially responsible investing may have. So let's just make up a church. Here we have a St. Anne's Church. Let's call it St. Anne's Church. It has a $1 million endowment. That is significant for that church, but how much influence does a $1 million endowment have in the entire US economy? Not much. But St. Anne's Church, together with others, and over time, can be part of a movement for change. And maybe that is a change in business activity, or maybe it's a change in business accountability, more transparency, for example, from large companies. Or maybe it's a change in cultural sentiment about what is even acceptable in business. If that sort of change happens over time, then every single organization, every church across the country that has made a decision to invest in a socially responsible way has played a part in that change, and that would include our St. Anne's Church. It's obviously very hard to say exactly what part is theirs, but they are very much part of a collective whole that made a change. So to think a bit about impact, here are some recent news stories that show a change of some sort. One is very specific and the other is a bit more general. First, gun manufacturers, gun retailers. These companies have faced significant pressure from both investors and the public after numerous recent mass shootings. One maker of guns, Colt, is now suspending the manufacture of assault rifles for civilians. Dick's Sporting Goods, very much in the news, will no longer sell assault rifles. Walmart will no longer sell ammunition for assault rifles. This pressure certainly comes from the general public, but it also comes from investors. There have been long-standing efforts by investors to sell off gun holdings, but now other investors, to the point that Greg and Kevin made earlier, other investors are now buying shares of stock expressly so that they can be active shareholders and use that status to pressure gun companies and related companies like retailers to make change. More generally, we're seeing some changing conversation around corporate purpose. You may know about B Corps, which are companies that have committed themselves to using business as a force for good rather than focusing only on maximizing profits. In the last year, some leading business leaders in the US have begun to urge all corporations to consider all stakeholders. Stakeholders would include workers, neighbors, etc. The Business Roundtable, which represents the country's largest companies, is now focusing not only on profits, but on how to benefit that same group, customers, employers, employees, suppliers. The idea here is that it is in a company's long-term interest. This is all in a company's long-term interest, that the well-being of society as a whole is essential to corporate growth. This is a complex and even controversial issue, but what's interesting here is that these ideas are now under discussion at major American companies, and they are considering ideas that are of great importance to many faith-based investors: how to treat workers, how to treat the community, how to treat our planet. So admittedly, when you think about what to do at your own church, it is hard to tease out what causes what, but these stories do show change, and they are important examples that may help you think about how to talk about the impact of socially responsible investing at your church and what you might hope to accomplish at your church. And so with that, I'll end here, Jim, and turn it back to you.
Okay, thank you, Karsten. And I know we're running a few minutes over what we anticipated. So let me just, in quick form, say a few things about giving, and then we'll go to some questions. And quite honestly, when it comes to the work that you're doing, both now and in the future, in the area of socially responsible investing, this is yet again another opportunity for you as an organization or as a congregation to encourage additional giving to your congregation. It's what Karsten has actually just been talking about, this engagement, if you will, with the rest of the congregation. And just as a quick guideline, when you are doing this, you need to make certain that you are communicating to the rest of the congregation, to your constituents and your organization about the impact, the difference that your work is making, even if you are participating in funds and not in direct stock holding, that you are actually working through an organization that is investing on your behalf with those funds. And you can actually talk about the social responsible engagement, which they are doing. So to be public and be transparent about the difference that your work is making. Additionally, always remember, if you're going to be doing any sort of encouragement of giving, make sure that you have in place endowments and other gift acceptance policies. Make sure they're public, that people know how you're going to be using their gift. That is essential for someone to trust you enough to give you additional gifts. And those gifts can actually both be for supporting your current work as well as future endeavors by creating endowment funds. So that is all I really have time to say regarding giving to your congregation, but there are many, many different opportunities to encourage that. But be transparent, be clear, make sure you know what you're seeking to accomplish, and then report on it back to your constituents, back to your parishioners. This is something I know that Kevin has to do a lot of among the Roman Catholic bishops that he deals with. And Kevin, there was a question for you from Peter Houvet from our Episcopal Diocese of Northern California, and his was, have you lost any investor parishes due to the negative screening? His question earlier was whether it was engagement versus divestment. Do you have any thoughts on that you'd want to share, Kevin?
Yes, we have lost, because we're not 100%, and it depends on the point of view of the people investing and whether or not it's any or all. And because we weren't at 100%, we had some people saying, even though there's a small amount, we know you've got this 4-quarter time frame, we don't want to be part of it. And so they have decided not to go with us. The positive, or I'm not sure about that second part of the question, Jim. Is it positive investing in like ESG, or is it more of the shareholder advocacy part of it?
I combined his two questions together, so why don't we skip that and move on? But I just wanted to invite others. People really have not put up many questions. This is your time to put up any questions you might have that this panel can certainly try and address. And Karsten, did you have any other thoughts or questions? I know you had mentioned something to me before when we were getting started.
Sure. No, one thing that I sometimes think about, and I'd love to hear from the other denominations, is whether this idea of socially responsible investing is something that really matches nicely with concerns of many people in their 20s, say, or teens or whatnot, and could possibly be a way to engage them in the church as simply participants, not so much as potential donors yet, but just it really to know that a church or a faith-based group that they know about or looking at is doing this is that, do you see that as being particularly appealing to young people and possibly a way to drive participation?
Greg, I'm going to ask you and your insight on that, since you actually are the gorilla in the room with your $1.7 billion. What are your thoughts on that?
Yeah, Carson, I would absolutely agree with the comment that the younger generation is very values oriented. If you look at even giving and how the younger generations are giving, they first a lot of times want to understand mission, purpose, values of organizations they give to before they actually give. And it's the same with investing. There's studies out there that show younger generations actually are going to be more inclined for socially responsible investing than our generations are. So it is a great way to engage and attract the younger generations with the work that we're doing, the ministry that we're in. And I just had one other comment, Carson, about what you said so well is even that church with $1 million, the impact might not be all that great, but it's also the witness that they have. I have met with donors, I've met with investors that have asked us or asked the congregation or parish that they're giving to, when you get the money, what are you going to do with it? Is
Right.
it going to go, and are you just going to, invest it broadly? And is it going to go into gun manufacturers and others? But for that congregation or that parish to be able to have that social witness, I think speaks loudly and, to your point, speaks very effectively to younger generations.
And clearly there's a growing interest in ESG investing and that engagement with what companies are doing in a positive way. There remains interest in sometimes divestment and pulling out of certain areas, but it is a complex thing. And so I think all of us would agree with something Kevin said before about being transparent, being clear, so that people know what you're doing, how you're doing it. And that's true both in how you're investing as well as how you are telling people how you're going to use their gift. So it all works together. Well, I regret our time tonight has gone so quickly. What this indicates to me is we should try and do something like this again in the future and engage with many denominations. And I hope that in the future we'll even have a larger participation. But I thank all of you who have joined us tonight and joined us for this brief introductory conversation. As I say, we will send copies of this recording, the slides, as well as various resources which will be coming available in the future. Certainly the book that all of us have worked on is not the only one. There are many, many different organizations and many different opportunities to learn more about socially responsible investing, and we encourage you to do that so that you can match your values with how you're investing. And we thank all of you who have joined us tonight. As many of you know, the Episcopal Church Foundation has a number of these webinars on our Vital Practices, our ecfvp.org site, which are available 24 hours a day, including many with Carson or I talking about investments, endowments, planned giving, and many other things. And just thank you all for coming tonight. All of our team at the Episcopal Church Foundation just loves doing this work. We love being engaged with in the Episcopal Church, but I know that all of your other denominations, just like us, would love to be engaged with you and to help you to achieve what your goals are. So please reach out to your own particular denomination, your denominational foundation, and let them help you to fulfill your efforts in being faithful in your values and in how you invest. So thank you to my panelists tonight, Karsten, Kevin, and Greg. Thank you all for attending, and I wish all of you a blessed evening. Thank you.